Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 20th, 2025, and we're diving into the latest earnings report from IHS Holding, one of the largest independent owners and operators of shared communications infrastructure. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. I'm excited to discuss IHS Holding's performance and what it means for investors.
Revenue and profitability overview. Let's start with the top line. IHS Holding reported a revenue of $439.6 million for the first quarter of 2025, marking a 5.2% increase year over year. John, can you elaborate on the factors driving this growth?
Absolutely. The revenue growth was primarily driven by organic factors such as foreign exchange resets, power indexation, and escalations. Additionally, there was continued growth in revenues from tenants, lease amendments, and new sites. However, this was partially offset by the impact of the financial terms in the renewed contracts with MTN Nigeria.
And what about profitability?
IHS Holding reported an operating income of $163 million and a net income of $30.7 million. This is a significant turnaround from the loss reported in the same quarter last year, largely due to a decrease in finance costs and administrative expenses.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 17 cents, but IHS Holding reported an EPS of 10 cents. John, what are your thoughts on this miss?
The EPS miss can be attributed to several factors, including the impact of the Naira devaluation and the initial churn from the MTN Nigeria contract renewals. While the revenue growth was strong, these factors weighed on the bottom line, resulting in an EPS that fell short of expectations.
Do you think this will affect investor sentiment?
It might cause some short-term concern, but the overall financial health and strategic initiatives of IHS Holding remain strong. Investors should consider the long-term growth potential and the company's efforts to manage costs and improve operational efficiencies.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. IHS Holding reported an adjusted EBITDA of $252.6 million with a margin of 57.5%. What does this tell us about their operational performance?
The increase in adjusted EBITDA and margin indicates that IHS Holding is effectively managing its costs. The reduction in cost of sales by $41.6 million, driven by lower power generation and maintenance costs, highlights their focus on operational efficiencies. This positions them well for future growth.
And what about their future outlook?
IHS Holding is focusing on debt reduction and cash flow improvement. They are strategically managing their capital expenditure and exploring opportunities to optimize their funding profile. This proactive approach should support their long-term growth and stability.
Key takeaways. In summary, IHS Holding has shown strong revenue growth and improved profitability, despite missing the EPS forecast. Their focus on operational efficiencies and strategic initiatives bodes well for the future. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing IHS Holding's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on IHS Holding's performance in the comments below.